Gold sub -$1,800 amid US debt deluge, euro, normalization, jitters, record UK energy inflation costs. Gold prices steadied around two-week lows in London trade Wednesday, holding $5 below $1,800 per ounce for dollar investors as world stock markets slipped, energy prices jumped, and this week's deluge of new US debt continued to hit the bond market. With 10-year US Treasury bonds offering 4% less in annual yield than the latest reading of US consumer price inflation, crude oil today rose over 1%, while uranium prices hit 6-year records and natural gas in Europe's wholesale market set yet more new all-time highs. Again, wind power is generating very, very little energy, says Bloomberg correspondent Javier Blas of the UK's light late summer breeze. Coal is fired up. The UK wholesale electricity price is now about 500% higher than the 2010 to 2021 average. And the winter heating season has not yet started. With inflation in the Eurozone at multi-decade highs, the European Central Bank may be able to normalise monetary policy sooner than most financial market experts expect, according to Austrian hawk Robert Holtzman ahead of tomorrow's 19-nation September announcement. The Euro Stoxx 600 index today fell near one-month lows thanks to pre-ECB jitters, according to a headline at Reuters. Gold priced in the euro struggled to regain €1,520 per ounce after falling to a three-week low. Among corporate U.S. debt meanwhile, the engine of supply is running on all cylinders, says one banker, apparently urging borrowers, now is the time. Yesterday saw a record 21 companies tap the bond market for new money, borrowing a total of $35 billion. September will see a record $47 billion of new junk bonds hit the market, reckons Bank of America, offering higher yields to compensate for their higher default risk. U.S. junk bonds currently offer 4.00% in annual yield, a record low on the ICE BOFA high yield index, with the extra reward over RR-rated bond yields very near end June's 2.09 percentage points, the lowest spread since spring 2007, eve of the global financial crisis. Adjusted for CPI inflation, AAA-rated investment-grade bonds currently offer the most negative real yield to lenders since 1980. Tuesday's steep plunge in gold prices saw no change in size for either the giant GLD or cheaper IAU gold-backed ETFs. Trading volumes in COMEX gold futures in contrast jumped by more than one-third rode from before the long Labor Day weekend, reaching its heaviest level since the U.S. Fed's no change July policy announcement. Asian stock markets earlier edged lower for a second day running, but Tokyo rose after new data from Japan, the world's third-largest single national economy, beat expectations for Q2 growth. While Japan's GDP expanded by 1.9% annualized however, that was aided by a much sharper than expected drop in prices, with deflation reaching 1.1% per year. The 19-nation Eurozone's GDP also expanded faster than expected in Q2, rallying 14.3% from last spring's COVID crash. But July then saw France's exports fall month-on-month, as did retail sales in Italy, and economic sentiment across the monetary union is now slumping on the ZEW survey, falling in September to its worst since April 2020. UK house prices meantime continue to rise near the fastest pace since the eve of the financial crisis, data from the Halifax mortgage lender said Wednesday, adding 0.7% last month from July. Demand for more space amid greater home working offset the gradual expiry of home buyer tax breaks. Offered amid the COVID pandemic, the cut to stamp duty has so far cost the Exchequer £4.4 billion, $6 billion United States dollars, in lost revenue according to one estimate. Parliament will today discuss the £11.4 billion per year tax hike proposed by Boris Johnson's government, a very significant tax rise, with little precedent outside of a budget, taking an additional 1.25% from working incomes as well as hitting investment dividends, to fund backlog, NHS health treatment delayed by the pandemic, plus a new plan to part-fund old age care in place of pensioners having to sell their home. FTSE 100 companies will pay £76.9 billion in dividends this year, up nearly 25% from 2020 according to stockbrokers AJ Bell. E-commerce giant Amazon, Nasdaq, AMZN, whose UK sales grew by one-half amid 2020's lockdowns to £20.6 billion, said Wednesday that it paid corporate tax of £492 million. Equal to 2.3% of last year's UK revenues. That figure includes the 2 percentage points paid under the UK's new digital service tax according to the BBC. The UK gold price in pounds per ounce today held above £1,300 for the 10th session running. Down 16.9% from August 2020's all-time peak, £1,300 was a new record high when first reached as the COVID pandemic took hold in February last year.